Most people have, in my opinion, have no idea what their insurance in the construction business covers and doesn't cover.
Right.
And hate to be in the position where you have a loss and you call up your broker and say, I had a guy who got hurt today and it's a problem. And he says, well, tell me about it. And he says, well, we're building this house. And he says, whoa, I didn't know you were building houses. You don't have coverage for that. That can not only put you out of business, that can bankrupt you.
So you and I worked together, Montana Contracting, right? You were a partner here when I came on as a young buck, as a young employee, and you handled all things risk mitigation and insurance. Since that time, a few years ago, you broke out and you followed a goal and a dream that I always knew that you had, which is to start your own company, Victory Risk Management. If you can, just tell the listeners who you are and what you guys do.
For sure. As you stated, I was on your side of the fence for a long time, 25 plus years. Um, got a lot of experience as a general contractor and home builder, but I was primarily the guy on the inside. I'm not the mechanical guy, never was. I was the guy who was in the office dealing with our accounting, dealing with our administrative, dealing with our insurance, and trying to create a safe, profitable business from the places that I could move the needle. And then, as you stated, after doing it for many years, decided to make a change, and uh, here I am. So I started my own business called Victory Risk Management, and I have a contract with a very large brokerage called PCF Insurance Services. So I bring all of my clientele to PCF. PCF is, depending on what publication you want to adhere to, I would say they're a top 12 brokerage in the U.S. That's out of 40,000.
Wow,
So they're a very large company, and amongst their specialty is construction, real estate, contractors.
got it. So
So that's what led me to this point.
great. And how long have you been doing this?
Um, 7 years, I guess it is now.
Wow, it's been 7 years.
I think so. Yeah.
Wow. So if you're a general contractor, right? Let's say you're starting a new business or just for any established general contractors out there, what are the baseline requirements that you need to have when it comes to insurance?
Well, first and foremost is general liability insurance, which everybody has heard that, and hopefully you have a broker who will explain that to you. You have to use a broker to access the insurance markets. That's just the way the law works. The insurance
Yeah.
markets do not work directly with the uh, the insured. You have to go through a licensed broker in your state to access those markets. So that broker hopefully has some experience in this space, in the contracting real estate space. Um, and the first thing you get, you build a tower that protects you. The first thing you want is general liability. Now, general liability includes protection for things you might, accidents and injuries that you might cause in whole or part, um, that would bring about a liability claim, and also includes coverage for property damage, uh, real property. So if you were doing a commercial building, let's say a strip center, and you did something that caused a loss, or one of your contractors did something, that's the that's the thing that makes this a little more risky for a general contractor, because you're accepting the risk of the people you subcontract to. You're not just responsible for your own uh, acts,
Workforce. Right.
your contractor as well. So
Yep.
let's say one of your contractors or one of your employees did something that caused a loss. I don't know, a wall came down, you were doing some demolition, something happened, a wall came down and did some damage to personal property and also caused an injury. Your general liability policy would, in a perfect world, react to cover both of those claims. And what a policy will do is it will not only pay for those claims and those injuries up to your limit, it will also defend you, and the insurance company will hire an attorney who will defend you in that lawsuit, in that claim. So liability, property, property damage that you have either part or full um, culpability in causing.
Got
That's
it.
general liability. So that's the first thing.
All right, let's stick on
Obviously,
this real quick. I just want to ask a quick
sure.
question about this. So,
Yep. Yep.
when I got into this business, some general contractors were carrying, 1 million, $2 million policies, which means $1 million of protection per occurrence with a
Correct.
$2 million aggregate.
Yep.
Today, it seems like, at least from my purview, that the standard is raised a bit to a $2 million per occurrence, $4 million aggregate. Is that fair to say?
If you can get it. So
Okay,
1 2 is still the standard. Um, but 20 years ago, $1 million per occurrence and 2 million an aggregate for anyone who doesn't know means the most the policy will pay during that policy period. So in theory, you could have two $1 million claims, or you could have four $500,000 claims, or any combination that you could arrive at up to $2 million. That's your limit that the policy will pay. So 20 years ago,
so the
that
first number,
was
not to cut you, the first number in that equation, right, on a 2-4 policy, a $2 million per occurrence means that you are covered for up to a maximum value of $2 million,
per
if
occurrence,
per occurrence, and
and
then
$4
you can
million
have.
dollars for the policy period.
Got it. Okay, so it's a per policy period thing, and you're
Yep.
protected up to the 4. Okay, got it.
Correct.
Okay,
Correct. So you are right. The standard has changed, and I think it's changed largely because of the litigious nature of our business. And people aren't suing you for $250,000.
right.
If someone brings a lawsuit against you, more likely than not, especially in New York State, you're being sued for millions of dollars. Whether that's appropriate or not, that just seems to be what happens.
Yep.
And the hope is that you have not only a policy, but good way to segue, an umbrella policy.
Right.
So the umbrella policy, it can either be called an umbrella policy because it goes over your general liability, your commercial auto, and your workman's compensation,
Okay.
or an excess policy, which in essence they're the same thing, but the excess liability, both of them extend your limits above your underlying policy. So, in an incident where, let's say there was a bad incident on a job, there was injuries, there's property damage. It may or may not have been involved one of your vehicles. Maybe a vehicle hit a building and caused a cascading effect. When each of those underlying limits, in other words, your $1 million auto policy, your $1 million general liability policy, when those are used up, that's when your excess and your umbrella kicks in
Okay.
at $1,001. So they don't come into play until all underlying existing coverage is fully expended.
Got it.
Um, so an umbrella policy in our business, you like to make sure it goes over your general liability, your commercial auto, and your workman's compensation. Because let's face it, in our industry, the reason why it's so expensive to insure is accidents happen, people
Yep.
get hurt, and property damage happens pretty frequently. And oftentimes you'll have several different lines of coverage come into the same loss. Like I said, if you have a vehicle driving in New York City with material going to a job site and there's a problem, someone's distracted driving, goes through a red light, hits a car, causes damage, hurts somebody. Now you have liability, you got auto, you could have your employee could be injured, now workman's compensation. All of those different lines quite frequently get dragged into these claims. That's why it's so important to have an umbrella policy, because it protects you above and beyond. If you didn't have that, you're on the hook for the balance, which means you'd have to hire an attorney to defend you throughout the entire process. Not just, oh, I lost the case and there's $1.5 million, therefore I have to come up with $500,000. Just to get to that point, there will be an enormous amount of legal costs over several years just to get to that get to the point where there's an award given by a judge or jury. Those legal expenses will not be covered if you don't have if you do not have the limits, the
Right.
umbrella. You'd have to hire your own attorney to work in conjunction with your attorney appointed by your general liability company.
Got
So
it.
it can get very expensive very quickly, and it can put you out of business like that.
Okay. So when is it appropriate to start thinking about getting an umbrella policy? I know sometimes it's determined by the project. Some projects or some clients will require their general contractors to have umbrella policies so they are better protected. But is there an average size project, or is there a revenue factor that determines an appropriate time for a general contractor to start looking into purchasing an umbrella policy?
Any of my clients or anyone who asks me that question, I would say buy as much insurance as you can afford to buy. Um, because depend now umbrellas can be very expensive for a contractor because understand again, like we said previously, you are taking on not just your own liability, but everyone who you have subcontracted to. A trade contractor, it's a whole different story. So if you are a plumbing contractor, your umbrella cost is going to be significantly cheaper than a general contractor. Montana Contractor is going to pay a lot more than ABC Plumbing because the only thing that the plumbing policy is going to have to react to is a loss caused by the plumber, period. As opposed to your policy, which could be brought upon by a loss by the plumber, one of his employees gets hurt, someone else has an accident, you as the general contractor are going to bear the brunt of that. You're going to get dragged into it. You're going to pay. And in New York State, not to go down that rabbit hole at this point in time, but New York State's labor law makes it such that uh, it's almost indefensible as a general contractor. You are responsible, period. Whether you had liability or culpability or any negligence or not, you're getting dragged in and you're going to pay.
Yep. Yeah, it's really fun doing business in New York.
Yeah, it's very
Yeah.
difficult,
Yeah, it sure is. So
especially in New York City.
yeah, especially in New York City. Yep. Let's talk a little bit about how these rates are put together. And I think it's important to talk about because from my experience talking to a lot of my colleagues and even looking at the things that we do here, I think there's a huge misconception about how to appropriate the insurance costs into your bids. And I think that there's some I think there's a lack of clarity, right? When I talk to people, they don't really know how their insurance, rates are set up and how to use those costs in terms of bid strategy. So, starting
Yeah,
with general liability, what? And I know there's different policies, but maybe in general, how are those rates, configured?
you're right. It is different for different companies. Um, Without giving a further explanation, excess and surplus lines coverage. In other words, there are two different types of policies: admitted policies, which are policies that are fully reviewed and approved by the state you're in. They're admitted to that state. That means every endorsement, every all the policy language and terms and conditions have been reviewed and approved by your state. The excess and surplus lines market, which is some people call the Wild West, um, it's not without structure. However, they aren't um, held to the same standard. So they have their own freedom of rate and form. They can decide what they want, and uh, those are typically a little more complex because those policies will oftentimes be rated on revenue only. Period.
Got
Revenue.
it.
So the policy that we've talked about this in the past. The policy that you have is a very strong policy with a very strong company that's an admitted company in the state of New York, and your policy is based upon subcontracted costs and your exposure on your own field payroll, people who have exposure to a job site. In other words, not someone who's in the office, not someone who's doing administration,
Right.
not someone who's doing sales. Project manager, yes. Laborers, yes. Carpenters, yes.
Right.
So that rate is determined by those numbers. So you know going in what your rate is per $1,000 you spend on a subcontractor. You
Right.
know that rate. So you can, the way I like to educate my clients is, if you have that type of policy, estimate it as if it's a line item. It's no different than cubic yards of concrete, or putting a lumber list or a fixture package in your estimate. You have a fixed cost that you know what it's going to be. If you know your sub cost, you know what the insurance is going to be to cover those subs. If
Right.
you know what your payroll is for your project managers, your carpenters, your superintendents, and your laborers, that's a different rate as well. You put those two factors into your bid, you should be covered.
Yep.
I don't think it's advantageous when you have that kind of policy to just put a percentage on it and lump it at the bottom,
Yeah.
because you might be overestimating, you might
Right.
be underestimating.
Right. And as the projects get bigger, that can win or lose you a project, right?
There
Like,
you go.
on large projects where you're in a competitive market, some of these bigger firms are taking jobs at extremely low margins. 3% fees, 4% fees. I've heard of lower percentage fees.
Yep.
So if you're using an insurance, a line item at the typically the last line of the proposal, and you think that your insurance is 3% because last year you looked at your profit and loss report and your insurance totals, again, not workman's compensation, which we haven't talked about yet, but your general liability, maybe your auto, liability, those costs, maybe they were 3% of your revenue. That doesn't mean that your insurance is 3% of your revenue.
Correct.
And I think a really critical point to point out that'll be helpful for the listeners is, if you have an umbrella policy, your umbrella policy is going to cost you something from, typically the beginning of, let's say, March to the end of March that year. So if you're including the cost of your umbrella policy in your bids, and you win enough work where that cost is covered, moving forward above and beyond that, if you wanted to, you could drop your insurance rate on your estimate to no longer include the cost of your umbrella policy.
Yes, that's assuming that the umbrella policy is non-auditable. It could cut both ways. There are some that are auditable. There are many that are not auditable. So you need to understand this. Um, hence having these kind of conversations
Right.
that you and I are having right now are conversations that anybody who's in this business should be having with their brokerage, understanding what they're buying, understanding what they're paying for, and I liken this experience to the way most of us think about going to the dentist. Right? Most guys in our business, they think about their insurance one time, maybe two times if they have a loss.
Yeah.
One time when their renewal comes about, and they put their head down, they avoid it, they get the information, they get their renewal, and then they go, okay, I'm done. I don't have to think about this for another year.
Yep. That's exactly
My
right.
view is that's the wrong way to look at it. You should understand, what else do you buy that you spend that much money on that is so critical to your longevity and your success, that you don't understand, that you don't ask questions, that you don't truly become almost like an expert on it and understand where it's going to harm you and where you can use it to your competitive advantage. And most people in this business they say they have insurance. That's just like saying, I have a car. Okay, great.
Right.
You have a car. Do you know what you have is going to protect you? Do you know, there's a reason why you get that insurance policy and it's 70 pages long. It's a contract. It's not an insurance policy. It's a contract between you and an insurer that says, if this happens, this is what I will do. And there are clauses. Make sure that you don't have an exclusion for heights. If you're a carpenter or an electrician, you don't want an exclusion for heights. That means if you're working on a ladder or a scaffold, you don't have coverage. You want to make sure that you don't have a residential exclusion if you're working in the residential field. Many policies do. Some policies have commercial exclusions. Some policies have third-party exclusions. In other words, there is no coverage for someone you subcontract to. Those things are clearly defined in your policy and listed as exclusions. The insurance policy will not say, Matt, I'm giving you insurance and I'm going to cover this, this, and this. Doesn't work like that. It says, I am not going to cover this, this, and this. It tells you what it's not going to cover. Most people have, in my opinion, have no idea what their insurance in the construction business covers and doesn't cover.
Right.
And hate to be in the position where you have a loss and you call up your broker and say, I had a guy who got hurt today and it's a problem. And he says, well, tell me about it. And he says, well, we're building this house. And he says, whoa, I didn't know you were building houses. You don't have coverage for that. That can not only put you out of business, that can bankrupt you because you're personally liable to respond to that loss and to that lawsuit. And if you don't have the coverage, they're not going to pay for an attorney to defend you. So the short version of that is read your policy, or at least say to your broker, explain to me what I need to know about this policy.
How often do you see like circumstances where something happens on a project and a GC or a subcontractor thinks that they're covered and then finds out that they're not covered because of an exclusion in their policy? Is it a common occurrence?
It's I wouldn't call it a common occurrence. However, it can be a catastrophic occurrence when it does happen. This many years ago, we at Montana Contracting, and you might want to edit this out. Many years ago, we had someone who came in and told us they could save us money on insurance.
Mm-hmm.
To me, as someone who's been on both sides of these fence, that's your first clue to say, thank you, have a nice day. I'm not interested in saving money on insurance. I'm interested in protecting my business the best way I can for the least money I can.
Right.
Not spending the least on your insurance. There's a reason why the Geicos of the world spend maybe hundreds of millions of dollars on advertising, because all they keep telling you is you can save money. You save money by lowering what it covers, period. There's no magic wand. So we found out that we had, and thankfully we didn't have a loss, but we found out that we had an exclusion for residential units larger than 36, I think it was. Well, at that point in time, we were doing a large renovation in Yonkers.
A renovation or a subdivision?
A renovation.
Okay, right. Yeah.
In Yonkers,
yes.
You know the project.
I do.
That had an exclusion for any residential cluster homes or buildings over like 36 units. Well,
right.
There were many hundreds of units. So in theory, if there was a significant loss, they would have not covered it. If someone would have broke their arm, if somebody would have needed 20 stitches in their hand, they would have probably paid the claim and then said to you, we're canceling you in 30 days. You need to find new insurance. If somebody would have died, they would have said, we didn't know you were doing this work. It's excluded. It's in our contract. You're on your own.
And that's it.
So,
you're out of business, just like that.
You're done. Yeah. And it's not just like you say, oh, sorry, our business is going out. You are now going to have civil lawsuits against you, where people are going to say that you caused this injury and you were uninsured, and they're going to come after you personally. Then your own personal assets are going to be maybe questionable at this point and exposed. So the long and short of this is read your policy. It's boring.
Or have it read to you.
Or have somebody say to you, look, Matt, this is what you need to know. You have an exclusion for this. You can't work in New York City. You can work in New York City. You can only work in New Jersey up to this. Just have an idea of what you're buying.
Okay.
Simple as that.
Makes sense.
And there's huge ranges in what we're buying. Huge ranges.
Yeah, definitely. Okay. General liability, umbrella policy, workman's compensation. What does that cover?
Workman's compensation will cover your employees. It's a state law. All states have a law for it. Well, there's some states where you can where you can have exemptions, or it's not as ironclad. I think Texas is one of them. There's some states where you don't need it. Florida too, where you don't have to have it. Most states you do. Okay. Workman's compensation covers injuries to employees. It's based upon actuary studies that show losses and injuries within a specific class. Obviously, demolition, excavation, electrical contracting is far more costly and far more dangerous than somebody doing estimating or
Yep.
somebody doing clerical work. Um, you pay into it, and it responds for any kinds of injuries that happen on the job. That's why if you ever have to go to an urgent care, if you have an injury, you break a bone, you cut yourself, when you walk into these places, one of the first things they ask you is, did this happen at work? Because if it did happen at work, it immediately goes to workman's compensation. The facility and the doctor know they're going to be paid on dime one. And the good thing for the injured party is um, there's no deductibles, there's no copays, there's no in-network, out-of-network. It covers your injury from day one till the time that claim is closed, which could also cover long-term scenarios such as physical therapy for someone who has a bad back injury. So that's the good part of comp. The bad part of comp, from a general contractor standpoint, is that it is very much in favor of the worker. It's very hard to prove. If you hire somebody who's had a back injury on a previous job or might have had several surgeries and you don't know about that, and I know that's a slippery slope as to what you can and can't ask these people.
Yep.
He could work for you for one day and come in and say, Matt, I hurt my back on the job on Main Street today. I need to go to the doctor. Yep, he's got a slip disc. You're going to pay for that. And that can be a long-term. Soft tissue injuries and back injuries can be long-term exposures. So there's really no way to protect yourself from that aside from just being aware of who you're hiring and having the best possible controls in the field to ensure that your workers are working safely, they're using proper safety equipment, and there's a culture of accountability in the field where guys are stopping, and it comes from superintendents, stopping unsafe working conditions, stopping guys from standing in the top rung of a ladder. All that kind of stuff will help you avoid comp injuries and keep your comp costs down. And comp is the other part of comp is you'll get an XMOD, an EMR, an experience modification rate, which in essence is like a credit rating for your company. And it works as a surcharge. So if you have frequency in issues where you have a lot of claims and a couple of big claims, each state does their own mod calculations, and it's not really transparent as to how they do it. And they tell you, Matt, your XMOD is 1.3. That means you're 30% above the mean.
Right. One is like the baseline, right? And you want to be below a one.
Yeah, obviously, if you can be at or below a one, that means you're on par with or better than people who are doing work in the same class. And the problem is, if you're north of that, which is very common, you're going to pay a surcharge. Here's your rate. The rates are essentially defined by the state. Here's your rate times 30% because your XMOD is 1.3.
Do you have to register to get an EMR?
I'm sorry?
Do you have to register to get an EMR?
No.
So how do you find your EMR as a general contractor?
Your workman's compensation company will tell you what the EMR is.
Okay, got it. Okay.
The EMR, I believe you need 3 years of experience. So if you start a new company, let's use the state of New York because we're talking in the state of New York.
Yes,
if you start a new company in New York and you decide that you want, or you don't decide, you need workman's compensation because you have employees. That's the first trigger. If you have employees, you need workman's comp.
Okay.
You'll have to go to, most likely in the construction or real estate world, you'll have to go to the state insurance fund, which is a quasi-state agency that gives you this policy. It takes 3 years to establish an XMOD. Now they have historical data to apply against other people who are doing what you're doing. And then at that point, your broker can then go out to the market and say, I have Matt's contracting company. They've been in business 3 years. Their XMOD is 0.9. And now you're going to have companies that say, okay, I'm comfortable with that. I'm going to give them a bid. So it takes 3 years, I think at least 3 years to establish that medium.
Got it. We've encountered some smaller subcontractors, right? That we know or have had relationships with who they claim to be owner operators. So they'll say, well, I'm an owner operator, so I don't have to have workman's compensation.
Right.
Some of them have employees,
Yes.
helpers, laborers. Some of them don't.
Yep.
Can or should a general contractor be working with subcontractors that don't have workman's compensation, even if they are owner operators and or if they do have employees actually working for them?
Well, the in New York State, you're right. You can get an exemption as a sole operator. You apply your sole um, operator in a business. You have no employees, and you choose to exempt yourself from workman's compensation. So you'll get an exemption form that says you don't have to have workman's compensation. However, what will happen is when you, as a general contractor, hire that person and your workman's compensation audit picks up that you paid this person, this company, money, they're going to say, let us see his insurance certificate. And you can say, he's exempt. Well, he's exempt by the state to carry workman's compensation. That doesn't mean that your workman's compensation carrier will just look the other way. What they'll most likely do is take that person, let's say he's doing carpentry.
Yep.
They'll take that person and they'll add him to your carpentry payroll as if he was an employee. Because what will happen is if he gets hurt on your job and he doesn't have workman's compensation or is exempted himself, he can attempt to file a claim against you. And the the scales are tipped in their in the workers' favor, significantly tipped.
The scales are tipped in the sewer's favor in general.
Yes. Right.
Yeah.
So the injured party is going to say, I was working for Matt's contracting company. I'm exempt, but I got hurt. I need to file a claim.
Yep.
You'll end up paying for that as the GC. So to answer your question, if the person is truly a sole proprietor who has no help, and you're right, oftentimes these guys claim this, but they're paying someone cash to work with them.
Yep.
You can pretty much assure yourself that if that cash employee gets hurt, he's going to sue you, period. And he's going to win, especially in the state of New York. He's going to win because the standard of negligence is not what you think. He could have gotten hurt on his own. It had nothing to do with you. You're going to end up getting stuck with that suit, or at least having to defend yourself. So what I would recommend is avoid hiring those people if you can, or make a risk management decision what they're doing. If it's a guy who's painting trim in a house, maybe you can live with that risk. If it's a guy who's framing a house, bad decision.
Yeah, for sure.
So, you gotta weigh those decisions. Risk management is about making choices. If you eliminate risk, you eliminate upside. So you're never going to eliminate all your risk, but you can certainly manage it in an intelligent fashion. So hire people who have workman's comp, and if they have an exemption, make sure it's in a class of business that you are comfortable with that. Because if you have to pay for it in an audit on your own workman's compensation, it's not going to be a lot of money. Or you could also just make a deal with that contractor saying, look, my comp is going to charge me as if you're an employee, so we have to factor that into what you're charging me for the work.
Makes sense. Okay, how do owners protect themselves in a construction project?
Now, I'm going to assume we're talking about owners, contractors, and subcontractors in the state of New York, right? Should we assume that?
Yeah, I think all I know is the state of New York. So from my experience, it seems to be we're typically in our contracts, in our AA contracts, there's a section that we fill out that advises the client or the owner of what they're required to have from our point of view in terms of insurance, right? And we typically tell owners that they're responsible for purchasing a builder's risk insurance policy.
Yep.
And they should purchase a policy that covers them for the cost of construction.
Right.
However, correct me if I'm wrong.
Yep.
Builder's risk insurance policy covers you for what you call sticks and bricks, right? So
property.
Right. It's a property protection coverage. So site work, is a large portion of the cost of a construction project. Your builder's risk policy does not cover you for any site work, right? It's pretty much the same thing for, is it foundation? Would you consider a foundation something that sticks in bricks?
I think the underwriting process takes that into consideration. It is possible that in a total loss, in a fire, in an explosion, a gas line explosion, something like that, the foundation can be. But I would imagine that they factor that in a way that's highly unlikely. But I'm sure, but it would be
Right, but it's
covered.
still the structure of a building, and it could get
Correct.
damaged if there. So,
Correct.
so the point of a
Correct.
builder's risk insurance policy is it protects you from what exactly?
So the builder's risk policy, what I always recommend is it be taken out by the person who owns the property, so not the general contractor. If you have an owner who wants the general contractor to take that policy, you should be passing that cost on because it's not that policy is going to protect primarily the owner. So, like you said, sticks and bricks. Let's use a house. You're framing a very large custom home. That home could be in an area that's not very protected. It could be in the woods somewhere, right? It could be a house that's in an area that doesn't have a fire department, that just got a volunteer fire department, doesn't have fire hydrants. So the chance of you having a total loss in that house during construction is greater than if it's in a suburban area where there's fire hydrants and things that can put out a fire. So the builder's risk protects the house under construction from all perils. In other words, wind damage, hurricane, fire, also theft. It's become a big problem in recent years where someone will scope out a job site and they'll either, for a while, a big problem was electrical components and wiring were getting stripped out of houses because people were using the salvage of the copper in the wires. Even though it's only a small amount, they were pulling out fixtures and wiring, bringing it to a scrap yard and getting money back for that scrap. Or a house load of custom windows. As you know, that's very expensive. You get a load of windows that comes on a trailer on an afternoon. They're not going to be installed that same day. Overnight, those windows could disappear if it's not a protected site or there's not a place that you can lock them up, like a shipping container or something like that. The builder's risk will react to that loss as well. So theft, any kind of peril. So what happens is, let's say someone hires you to build that house, it's framed and the windows are installed, and somehow a fire starts. That burns to the ground. Now, technically, you have not been paid, and technically, you have not been paid for those windows and that framing material. That material is the owner's property. It's not yours. You're the contractor. So the owner is the one who would benefit from filing a claim for builder's risk. The owner is the one who would get the money back for the materials that he purchased, whether he paid for them or not. It's part of your contract. So it's never a direct correlation between what you've billed, what you've been paid, and what was on the job site. The assumption is it's all the owner's, it's his property, whether he's paid for it or not. It's his on. So just in case he decided that he no longer wanted to do business with you and removed you from the job, you can't take those materials. They're his materials. So the builder's risk should be taken out by the person who owns the property, who has the most to lose from a material loss on the job.
Makes sense. And it's a pretty minimal cost in comparison to the scope of any project that you're doing.
Pretty minimal, but the cost is going up. It's going up dramatically based
Of course,
upon
the cost is going up. Yeah.
based upon the inflation and the cost of materials, which have skyrocketed since 2019 for obvious reasons.
Yeah.
And also based upon, like I said, theft and just the fact that it's becoming more and more frequent that these things are happening. So costs are going up.
Yep. You were a partner at Montana Contracting for about 30 years or so. You made a decision to leave everything behind, leave a successful company, and start a consulting firm from scratch. What drove you to that decision? What was that experience like? And what advice do you have for people who were leaving behind the safety and security of a protected position in a company or something that they've been doing their entire life and kind of starting over from scratch?
Um, wow, that's a good question. It's never an easy decision for anybody who makes a career change. You know, well into their adult life. Um, as you know, I think when I met you, you had long, thick hair, right?
Yeah. I don't
This
know
is
about long, but I had some hair. Yep.
right. The pun was it's a tough business. It's a tough business. It's a business where you're constantly chasing your money. Um, it's a battle often. I loved it for a long time
Yeah.
until I didn't, and it just got to the point where me personally, I just wanted to do something different. Um, Also had the thought that I still have that I don't want to stay in this market, meaning geographic market, for an extended period of time. I want to have the freedom to pick up and go. And the business that I started is a business that, for you and I are talking on this the podcast. We're not that far distance apart, but I could be in South Carolina, I could be in Utah, I could be, and we could have the same conversation, and I could be just as effective and helpful for you in another area. So that was also part of my decision, was the future. So I can build clientele. I have an expertise that is probably somewhat unique,
Yeah.
being a principal of a construction company and then going to the other side, to the consulting side, to the risk management side. And I can do it from anywhere. I can do it in an office with a webcam. And when I need to get on a plane or get in my car and drive to see a client, I can do that as well. So that was, I don't know that it was much more um, to it than that. Just decided that I wanted to make a change, and I like the challenge. I've always been someone who's been part of teams and team building in anything I've done. So this was a new team and a new challenge and a new uh, risk.
And it worked out.
It's worked out. It's still a battle. I still have to shake the tree every day and find myself clients, and hopefully build enough of an. Once I get a client, my goal, and I think for any consultant, the goal should be, you want to build exit barriers so your client can't afford to go get someone else, because you bring enough value added to the table that doesn't cost them more money, but instead of me, they would have to have another broker. The chance that other broker had 30 years construction experience are probably close to zero. And the chance that they understand this space like I do is probably also far less likely. Just like if you have a medical issue, you don't just go to any doctor, you go to a doctor who specializes in the thing you need to cure,
Right.
or like you and I have talked about with attorneys, right? If you're in the business that we are in, you don't go to an attorney who deals with trademark or SEC filings. You go to an attorney who understands construction, litigation, and contracts. So my feeling was, if I can provide those added value things, I am building exit barriers where someone says, "Why would I go to the next guy?" Insurance is something that I can't get you cheaper than the next person who has an agreement with a brokerage that deals with AIG or Travelers. They cannot change the price based upon the broker. However, I feel like I have an expertise that can maybe convince underwriters to look at things differently because I know the space and I can explain it. I can't do that for the financial industry because I don't understand it. I didn't work in it. I can't have those conversations. When it comes to contractors, construction, real estate, I'm very comfortable having those discussions, and I think that's where I can make a difference. And so far, so good.
I love it. How can people get in touch with you?
My email is cmontana@victoryrisk.net. That's the easiest thing to do.
Great. Thank you.